All right, good afternoon, everyone. Happy post Independence Day. I trust that we are doing well. Thank you for having me. It's a privilege to speak from my wealth of knowledge. So, without further ado, I will go straight to the point and I'll try to be as brief as possible to get the full presentation. I can share the link after basically. So I'll be talking on accounting for SMEs and wealth management. All right, so let me try and hide this. Okay, so first things first, is it important to note that accounting is the language of business, really, and that when executives meet, one of the things they want to talk about is the finances, because I mean, every business is existing, or the essence of every business is to make profit, unless, of course, you're not for profit organization and all that. But if you are in there to make profit, you need to understand the importance of accounting. You need to understand the importance of establishing accounting systems and control and setting it up, implementing it, monitoring it really. So I'm hoping that at the end of this, presentation, you'll be able to understand or at least have some sort of idea on how to implement your accounting system in your SME and to see it work. So I said that business owners that are passionate about the growth of their business must take seriously the implementation and monitoring of their business's accounting and control system. And the best thing about this is that one can also apply this to their personal lives. Well, according to Kama 2020, the revised one, it sort of defines what an SME is. I'm sure it has already been established on the course, so I'm just going to skip through this. But the goal is for every business owner to be armed with the basic accounting knowledge and the requirements to run their SMEs successfully. So briefly, these are the importances of having a proper accounting system in place. It helps you to identify and track all your sources of income and expenses. So with an accounting system in place and you with your record keeping in place, you are able to track, okay, this is all the income I made in this period. This is all, or these are all the expenses that I made in this period. And keeping track helps you to be on top of it really, because you don't want to be spending money that you don't know where it's going. Just like in our personal lives, nobody, at least wealth advisors, would advise everyone, even as individuals, to have budgets, to be able to monitor and track what money is coming in, what money is going out, so you can be able to plan for the future, to be able to save, to be able to invest, even to have emergency funds. So the same thing applies to your business. Having an accounting system in place will help you to track all your sources of income, all your sources of expenses, from literally an Instagram business who has no physical location to a multinational. Basic is still the same thing. Also, it helps you to position your business for growth, right? And we've already established that first you need to be able to track your income and expense. There is no way you can grow, or there's no way you can even think of growing if you don't even know the resources that are available to you. When you have an accounting system in place, you are aware that, okay, let's say I have five revenue lines and I'll try to make it as basic as possible. Imagine I have an online store where I sell clothes. I can be so detailed to be able to break down my revenue in terms of, okay, based on clothing category, I'm selling loungewears, I'm selling corporate wears, I'm selling baby wears, I'm selling swimsuits. So those are all different, sources of revenue for my clothing business. So with an accounting system in place, I'm able to say, okay, 5 million naira came in for this clothing section, two, three, and four. Because the accounting system has provided this information, I'm now thinking, as the business responsible business owner that I am, that okay, this revenue line. Maybe swimwear is not really doing well. I think we may need to scrap it and all that. But without an accounting system, what data do you want to use to analyze how well your business is doing? Another important is tax savings. Really, or I'll just go ahead and say that your tax is basically calculated based on your profit before tax, right? After you subtracted your direct expenses, your indirect expenses, really, and you've added other operating income. If you have a loan, you paid your interest expense. So the amount you have left is what the amount you have left is what is taxable, is what the tax rate will be applied on, really. So if you are not keeping an accounting system in place, I don't know how it's possible. What basis are you going to calculate your taxes? And further down the line, I would explain the importance of, or why it's important really as business owners to be mindful of this amount, because for some people they are not paying taxes, they are not covered. Even if they fall under the tax bracket, they are not paying taxes and all that. And you will find out that it's very easy, depending on how serious the tax audit guys are, to track it down. And even if you've not been paying taxes for 5 years or 4 years, basically, in the fifth year, if they come to know of you, right, and they ask you, okay, where are your accounting statements, or where are your financial reports and all that, you need to pay your taxes aside the fine that they may charge you. So if you're not able to even present, okay, this is the income I made and all that, right, they give you whatever they deem fit as your tax. And then if it is more than what you should pay, I don't know, you have to go wherever the battle tax payments to battle it out, really. So it's very important. So an accounting system helps you to generate your financial reports. I already spoke on this, and then it helps you to position your mindset for a business that outlives you. I mean, if I start thinking about accounting system in place, I'm already thinking beyond me. I'm already thinking that beyond, oh, what I'm going to make, the profit I'm going to make today to be able to take care of this and that. I'm thinking of an accounting system means that, okay, I'm thinking about the future, really, a future that may exist without me, but I want this business continue growing because it is a legal entity. All right, so the crux for today is to establish the guidelines, right, to setting an accounting system. And I have about 7 or 8 points, and I'll try and run through them quickly. And then if there are any questions, you can leave them in the chat box. I'll try to respond as well. So the first thing, you have to determine your financial year. So basically, a financial year, or according to the accounting standards, you should be able to establish a period. It's called the periodicity concept, that says that every business should have the period from which it runs, right? Can you hear me? Am I good to go?
Yes. Please proceed.
All right. So you should have, or as a business owner, you should think about what financial year do I want my business to run. For most banks in Nigeria, they run from January to December, which is the same fiscal year as the government, January to December. And really, it's considered to be the easiest period because you know that even as human beings, we time ourselves based on January to December. January is Happy New Year, December 31st is the crossover night or whatever it is. So it helps you to track, basically. So even as a clothing business owner, even if I don't have a physical store, I need to establish, okay, this is my accounting period. I want to be able to track everything that happens in my business within the bounds of January 1st to December 31st. Some people may have June 1st to May 31st, whatever it is, depending on when you start your business, really. So next thing is to separate your business account from your personal account. I can't overemphasize this. You probably have heard so many people talk about separating your business account from your personal account, because I don't understand how a business would function if I'm getting money, my personal money, maybe an allowance or whatever it is, or I'm even working in 9 to 5 and I'm getting my salary inside, for example, GT Bank, and then I give my customers GT, okay, pay into GT Bank as well. So I sell a dress, they pay into that account. I receive my salary, they pay into that account. It becomes very difficult to track things that belong strictly for your business and strictly for your, for your personal self. And you need to understand that a business is a legal entity, so I believe it deserves its own bank account at least. And for owners or business owners who are not necessarily savvy about how accounting softwares work, right? This is just like the basic, like the barest minimum to have a different bank account so that at least you can use your bank statements to be able to track all your income and expenses. So the next thing after separating your bank account from your personal account is to request for invoice receipts, and you should also issue same as well, because you need proofs that okay, this money came in through evidence of receipts that you gave to the customer, at least a copy of it. And you should also have invoices, right? When, for example, as a business owner, let's say I need to, you know, incur a cost for my business. For example, in a clothing business, I pay my, if I'm outsourcing my, sewing of the clothes, I need to collect an invoice so I can say, okay, I recognize 4.9 million naira as the cost of sewing these clothes, right? Okay, where is the invoice to back this, expense of? It's just a proof. Then next thing is for you to set up accounting and internal controls. For example, the easiest is segregation of duties, and it also depends on how many people are in that business really. But the more you grow, right, you need to be able to set up accounting and internal control systems basically. The next one is to deploy an accounting software. Now your business is growing, right? And even if it's for a one-man business, as I said, it depends on your mindset. Do you see this business outliving you, or do you even want it to outlive you, right? You need to think about your accounting software. We have QuickBooks Online, we have Sage, we have Zero, etc. So you may need to, employ an accountant or get the service of a an accounting advisory firm to help you set this up if you're the only one, and to guide you on how to post transactions and all that. It's very important for you to say, oh yes, I have an accounting system in place that is effective really. So um okay, so the next thing is the accounting basics for SMEs. There are 5 components of any financial statement. You need to know the meaning of what an asset is, what a liability is, what equity is, what revenue is, and what expenses are. So basically, assets are economic resources that are expected to provide economic benefits in the future to you. And I'll just, again, my clothing business, an asset for my clothing business would be my tailoring machine, because it's helping me to produce clothes that is now generating income for me really. So an asset can be divided into a current asset and non-current assets. Current assets are assets with current assets are assets with life of 1 year or less than 1 year really. And a typical example is going to be your what's it called, your cash and cash equivalents based on the financial statements that you are trying to prepare your inventory. Then for your non-current assets, there are assets that have greater than 1 year, life, and then you have your receivables, your PPE really. So your receivables, it can be obviously long-term receivables. Then if you are dealing with current assets, it's going to be your current receivables or your trade receivables. So your trade receivables are those that relate to your business, and obviously we expect that if you're expecting money from anyone, right, and it depends on the contract. So if I sell a clothes to somebody, or I have a contract with a retail outlet that I'll be selling or supplying them 50 dresses in a month, I need to agree with them that okay, you would settle me at the end of the month, whatever. But if my contract with the supermarket is you can pay me after 1 year, I'm going to classify that receivable as non-trade receivable really. While if I'm expecting them to pay within a year, I'll classify it as your trade receivable. So we also have our property, plant, and equipment. The example which I gave was our tailoring machine or your industrial machine. We expect that the machine is going to be able to sew clothes for more than 1 year. So I would classify it as property, plant, and equipment, and it should be under my non-current assets. Then the next we have is liability. Basically, these are amounts that your business owes to creditors. That is people that have borrowed you money. So if the people, mind you, the people that borrowed you money, it may not necessarily be cash because you have trade payables. And for example, as a cloth owner or a cloth manufacturing company that I am, my trade payable is likely to be the supply of materials, right? Which is my own raw material that I use to sew the clothes. So if I'm buying in bulk and it's obviously, let's say it costs me 1 million naira, I'm not willing to bleed cash like that. And you should also, as business owner, should be able to negotiate things like this and say, okay, I will pay you, but supply these materials, I'll pay you. Just like you have your supermarket that you are supplying them and they will pay you at a later time. You should be able to negotiate such thing with your suppliers as well, that you pay at the end of this. So in this case, those materials I'm receiving are things I need to operate my business, right, on a day-to-day basis. So it will be classified as current liabilities. So in this case, will be trade payables. So if they supplied me materials worth of 1 million naira, I would recognize 1 million naira as my trade payables. So they are basically amounts that are owed to other people. Now, your non-current liabilities, example is if you've taken a loan from a bank, right, and you're supposed to pay within 5 years. So if it's greater than 1 year, then that is a non-current liability. And equity is the money or your capital that you have invested in the business. Is also your net worth. So as business owners, like most times you would see that most, like in the beginning stages of the business, you may be pumping in money from time to time. So it's very important that you are keeping track of all the money that you are giving to your business to help it grow.
Yes.
Really.
Jennifer, okay.
Yeah.
Okay, are you almost done? Because of time.
All right. So
Yes.
this is the accounting equation. I was going to explain how charts of accounts work. Then I'll
I think that, of course, are you willing to share the slides with the participants?
Yeah, I'm going to share the slides, but this is more technical. So when I'm done with this, I'll just end and then share the.
Okay, if you can run through it, thank you.
Yeah. So we have we have charts. I'm trying to explain charts of accounts here. So for business owners who have some sort of knowledge on how accounting softwares work, you'd need to create charts of account. And basically a chart of account is just a listing of all the account types that you have. So for example, the most easiest is cash and cash equivalent. So if I have cash, right, and I have 5 banks, so if I create a GL code or a chart account number for 1001, everything under cash that's on my bank account is going to come under the cash and cash equivalent. So if I have 1000 as my cash and cash equivalent, First Bank will be 1001, GT Bank will be 1002, and it just goes on like that. So it's very important to be able to divide or classify all the things or transactions that happen in your business into charts of account. So these are other guidelines, and this side is on wealth.
I can see you have a lot of knowledge to share there.
Yes, so I'll just wrap up and say, I'll just wrap up and say that wealth management is also very important. And I'll send this link to download this, and you see that under wealth management you have profit distribution and budgeting, and it just talks about how to go about budgeting, how to go about profit after tax and all that.